Hello, everyone. Thank you so much for joining us today, and welcome to this educational presentation where today I'd like to talk to you about how to confirm a winning trade. Now, the confirmation process begins with your entries. Okay, so we have to really figure out whether we have a adequate or proper entry technique, or if our entry technique is faulty. And that's how we're going to confirm if we have a winning trade or not. Let me show you an example right here. Let's look at this example in SFIX. This is an older chart book for educational purposes. Let's say you were really interested in purchasing this, but it got away from you, right? It's taken off and it's gone straight up. So you say to yourself, it's too late for me to get in. And that chat room I go to says that it's overbought. So I don't want to buy it right here. I think I'll wait for it to sell off a little bit and buy on the pullback, maybe when it gets to that support level, okay? So you decide to wait. And you say to yourself, okay, I'm going to wait a little bit and see what happens. And lo and behold, it actually does start to sell off. So at this point, you're saying, oh, okay, I think I'm going to purchase it now because it's come down to that support level and that Fibonacci support. So I'm excited. I'm ready to go. And then you jump in and you buy. Now, for the next 2 days, nothing really much happens. It really doesn't go up, but it doesn't go down that much either. But then all of a sudden, it starts to falter. And you say to yourself, wow, this isn't working the way I'd spent $10,000 on that Fibonacci support resistance class. It's not working at all. And then after another day, you say to yourself, you know what? I've lost far too much money. I don't want to stay in this trade anymore. Or if I've lost too much. If I stay in longer, maybe I'm going to lose way too much. I won't be able to trade for a while. So you decide to stop yourself out and get out of the trade. Okay. Now, this process I'm going to share with you today, actually in the next two bars that we see right here, would have confirmed that this is the place you should have purchased. So you should have bought right here. And with that confirmation, you could have potentially captured upwards of 57 points. Okay. So this is what we're going to be talking about today. The process of confirming a winning trade. Now, with the help of a small little method that you'll be able to apply as soon as today, if you like, along with a very powerful tool, you're going to be able to confirm these winning trades in just a matter of seconds. And I'll show you the process today. And here's the good news. The good news is this tool that will confirm the trades is readily accessible on our platform, the PTS Primo charting platform. With one click away, you'll be able to access this tool and confirm your winning trades. So welcome to this educational presentation. My name is Steven Primo. I'm the president and founder of Specialist Trading. If you're new to my webinars, we are all about educating you. That's our sole purpose. If you've come here today thinking that I'm going to tell you what I think the market's going to do, if it's going to continue on its little bounce right here, or if it's going to head straight down, or what I think the best stock is to buy, or the best stock is to sell, or what the perfect market trade is, or the perfect time frame, you've really come to the wrong place, because that actually goes entirely against our principles. You see, we feel that that is the main reason why most traders fail, because you're taking your cue, your decision-making process from someone or something else telling you what to buy or what to sell, what the market's going to do. And think about it. How do you make your own trading decisions? Do you wait for some guy on TV to come out, or some blog to read to tell you what to buy or sell? Or do you have some system that automatically spits out buy and sell orders on a nightly basis? You see, in my opinion, that is what holds traders back from being successful. And I know this from firsthand, because that's the way, when I first started trading some 45 years ago, that's the way I was taught. I was taught to wait for the earnings. The earnings will tell you whether a stock is going up or down, or wait for the jobless claims or the unemployment numbers, all the things like that, or to listen to the gurus on TV. And we didn't have the internet then, but we had newsletters, and wait and see what they said, right? Or look at support and resistance, or some indicators that you have no idea what they're based off of, just do whatever they say, right? I did the same thing 45 years ago, and trust me, it didn't work for me then. So it's not about, those things are not about to miraculously start working now. What will only get you on that road to consistency is when you make your own trading decisions. Now, most traders are afraid to do that, because they say, well, Steve, I've been trading 45 years like you, or Steve, I didn't have an education in, economics, or I haven't been, skilled enough, or I don't have enough experience. Well, I didn't have any of those things either when I first started, okay? I was lucky enough to have some mentors that taught me the same things that I'll be teaching you, especially in today's educational class, so that you can make your own trading decisions. That's what it's all about. Once you finally get to that spot, that, in our opinion, that's how you become a consistent trader. So that's what we're devoted to, educating you so that you can make your own trading decisions. And you'll be able to see that in today's educational class. Now, before we begin, as always, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using this confirmation technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember, since we are first and foremost an educational company, all examples are strictly for educational purposes only. Okay, now I see that someone has gone onto the question and answer box and says that they can't hear anything. If I'm not coming through loud and clear, I don't want to begin the presentation because, like I said, I have a lot of great free information to give to you today. So please, if you have a second, go to your question and answer box, just type in yes or no if you can hear me all right, and then we'll proceed right after that, okay? Okay, I'm seeing mainly people are saying yes, so that's great. Thank you, because that is a presenter's nightmare. I hate to tell you, one time I went through an entire presentation with my mic off, so I had to give it over again. So it's great. Everyone can hear. It's this one person who says they can't hear anything. So oftentimes it's your own platform, it's your own computer. Many times if you log off and then log back on again, your interconnection may be a little faulty, and then things will be okay. So thanks for everyone for getting back to me. It looks like everyone can see and hear everything clearly. So let's begin. Now, before we also begin, I want to share with you our Twitter information. I know a lot of you are looking for information on a daily basis, education and ways to learn more about the markets and our style of trading. So I would suggest copying down our handle right there. I post anywhere from 4 to 6 different examples of signals that our strategies have generated and techniques have generated for that day. I also post financial wisdom, things to elevate your trading in a mindset point of view. So lots of great free education on a daily basis. So if you haven't done so already, please feel free to follow us on Twitter. Now remember, as I stated in the opening statements, we are first and foremost an educational company. Our sole purpose is simply to educate you, because that's what's missing from most traders' experience. They haven't been educated. They really just have the experience of following what someone else tells them to do, right? So what we want to do is teach you how to trade, because that's what a real mentor does. He doesn't just spit out buy and sell signals for you. He tells you and teaches you how to trade with the specialist edge. That's the same edge that I was taught some 45 years ago, and what has sustained me now for that amount of time. And hopefully it will be able to do the same for you. And you'll see that in today's presentation. Now, just a few things before we begin. We have a pretty big crowd here today. So if you have a question, kindly wait till the very end of class. I don't want to stop for every slide. I have like 140 slides here today. If we stop for every slide, we'll be here too long. I don't want to take up all of your Wednesday. So please, if you have a question, write it down or try to remember it. I promise I'll get to it at the very end. And the other thing I will answer at this point is, yes, this is being recorded. And a lot of you asked for that. And we record all of our webinars, so you can watch it at your own leisure. You'll be getting a link to this recording at the very end of the class. You'll be sent a link via email, okay? So if you have a question, wait till the end, and yes, you will get a link. With that stated, why don't we begin today's educational presentation? And I'd like to start out by something that my mentors taught me, and really has changed my way of thinking in terms of this process that I'll be sharing with you today. And that's this. Here's what they said. Whoops. What my mentors taught me over the decades, over 4 decades ago, was on the stock exchange floor, is that a specialist always confirms his or her own trades, okay? In other words, if you're not sure what that means, it means that a specialist just doesn't jump in blindly. He doesn't just walk through a door without knowing what he's doing. He just doesn't get into a trade on a whim or off of a purely discretional process. He really figures everything out and confirms whether he should be buying or selling, okay? Now, a specialist is someone who made markets on the floor. I was a specialist for 9 years on the floor of the stock exchange. And I always confirmed, and I kept that process involved in my trading. In fact, I use it today. This morning, I was trading this morning, and I was using this very same confirmation process that I'll be teaching to you. Now, some of you may be asking, okay, well, I confirm it, but how do I do that? I always thought confirm it just means the minute I get a green or a red arrow on my platform, right? Well, you confirm it obviously by applying some type of method, some type of process. And this is what we call the confirmation method. Once again, I was taught this some 4 decades ago, and I continue to use it in my trading to this day. So what exactly is it? Well, it's a little bit wordy. I'm going to share with you the rules. It's a little bit wordy, and don't worry if it is a little confusing, because I'll share with you a lot of examples later on going forward. But here is the confirmation method rules for buys, okay? All right, let's say your strategy, your system, whatever it is, generates a buy signal. After an entry signal has been given, you only want to buy once price trades 1 to 2 ticks above that original entry bar or the signal bar, okay, wherever you want it to get in. Now, let's say it doesn't trade above there on the very next bar. So if entry does not take place on the second bar, then the confirmation method in its basic form says continue this process with each preceding bar, as long as the setup is still valid within the strategy, or until the order is filled or canceled. Now, remember, this is not a strategy, it's a method. It's not a system where there's a set of rules that you have to follow the same way each and every time. A method allows you to edit and alter. So we're using this in its most basic form today, all right? The rules right here. Let me show you what I mean here in a generic example. All right, let's look at this generic chart. Let's say, it's taking off, and you say to yourself, you know what? I've been watching this. I love this. I'm going to jump in and buy, okay? So you jump in and buy. You're all excited. Some news just came out. It's starting to take off. It's really good news. And then this happens, right? Look familiar to anybody? It's happened to everyone before. I know it's happened to me. This is the way it usually happens, because we're not confirming the trade. But remember, this was the bar that we decided to get in. This was the bar that our strategy or our method or our discretion told us now we have to buy. So let's see how this would work if we applied the confirmation method. Because remember, a lot of times your idea is not wrong. It's right to buy this. It's just that you did not confirm it, and so your entry process is faulty. Let's apply the confirmation method. So this is the bar we wanted to enter right here, okay? Instead of just blindly buying at the market, this is where we're going to buy if it trades above here on the next bar. All right, so here's the next bar. Did we trade there? No. So we lower this entry point down a notch just above this bar, okay? And as long as you want to continue buying this, that you still think it's a good buy, or that your strategy is saying it's a good buy, you will continue this process of lowering it. Now we lower it down here, okay? So at this point, you have not purchased it yet, and you're thanking yourself. You're saying, wow, if I had bought at the market, like up here, I'd be losing money, but here I haven't even gotten into it yet. And I will be buying it at a lower level. So we continue to follow the process with each preceding bar. And at this point, right here on the next bar, this is where we would have gotten in. Instead of way up here, we got in down here. And we see this is a buy confirmation. And then look what happened right after that. Okay, so remember, your idea is not always what's wrong. It's your entry confirmation. You're getting in too early, maybe too late. Maybe you're not using any type of confirmation, okay? So this is the beauty of using the confirmation method. We can also use this to go short, or if you'd like to buy puts, not everyone just shorts the stock. So here are the rules for going short. Now, after an entry signal has been given or generated by your strategy or your method, you're not going to sell at the market. You're not going to just sell it with a limit. You're only going to sell when price trades 1 to 2 ticks below the original entry bar or the signal bar that told you to enter, all right? Now, if this entry does not take place on the next bar, the second bar, well, we're going to continue this process with each preceding bar as long as the setup is still valid within the strategy, or as long as you still want to sell this, or until the order is filled or canceled. You say, you know what, I'm canceling this. I don't want to do this any longer, okay? Let me show you what I mean here. Remember, I told you it's a little wordy, it's a little confusing when you just look at it in a paragraph spot, but as we see the visual, it makes more sense. Let's say there was some very, very strong support here. You're a big support and resistance trader, okay? And it broke it. It traded through. So you say to yourself, I've got to sell this. It's going to just fall out of bed. I've got to be short. And you buy the puts, let's say, okay? So you jump in at the market, buy a bunch of puts, and then this happens, all right? In 3 days, you're giving away half or over more than half of your money. You say to yourself, what did I do that for? My goodness, I mean, maybe I was wrong. Maybe it's not right to really short this. Well, a lot of times your idea is right. It's your entry process, not confirming. That's what's at fault. Now let's try the confirmation method. Instead of selling at the bar that we, told us that to go short, we're only going to sell if we trade below there. So did it trade below on the next bar? No, got close, but it never did. So if we still want to go short, we just raise our entry level to this spot. Did it go short or trade below that the next day? No. So we continue this process and we just continue to raise our entry point. Now at this point, we're going to be selling if it goes lower a lot higher. That's good. We'll make more money if we're right. And on top of that, we haven't even got into the trade. So we haven't lost any money the way we did earlier. So let's see what happened on the very next bar. Very next bar, we traded there. Even though we opened up higher and went higher, we traded down there. So now we are selling and we have a confirmed sell. Let's see what happened. Okay. Looks simple, right? Now, I don't want to tell you that this works 100% of the time, but this will put the odds in your favor. Remember, it's not about being 100% correct. I know a lot of webinars you go to say, this has never lost 99.9% of the time, or this never loses. I always tell students, run when you hear that, because that's just not true. I've been trading for 45 years and I still lose money. But you want to have something that puts the odds in your favor, meaning that you'll be able to recoup that maybe on the next setup. That's what it's all about, longevity. And the only way you can be a trader over that amount of time is to have a 2 steps forward, 1 step back approach. You see, mostly everyone looks for, oh, I just want to hit home runs. I just want to make a killing on every trade. Well, sure, that can happen. But it's been my experience that it can just as easily happen the other way. You can have one great trade and then give it all back in the next 2 or 3 trades. So we don't want to do that. That's more of a gambling mentality, all right? You ever gone to Las Vegas or any other place to gamble and gone to the slot machines or played cards and you're doing well, and then you stay there a little longer and the next thing you know, you've given it all back, right? That's the way most people trade, and that is a gambling process. You should never trade that way. Your trading should be 2 steps forward, 1 step back. Now, in order to know when to apply this confirmation method, we need a tool now that translates and tells us at the market what the market wants to do on a tick-by-tick basis. In other words, when do we actually apply this? What if you don't have a strategy? What if you don't have a method? Or what if maybe you don't want to apply the confirmation method right on your signal bar? Is there a better way to know exactly when to apply the confirmation method? Well, this will bring us now into the second stage of this educational webinar today. And this is the tool I was talking about. This is when we apply the PET-D. The PET-D is another tool I was introduced to some 4 decades ago on the floor of the Pacific Stock Exchange. I've been using it almost every day since. I've talked about it in many other webinars and many other classes and courses. If you're not familiar with it, it's a color bar algorithm, all right? We're keeping the algorithm and the calculations in-house because we want to take the hard work out of it for you. It's extremely complicated and hard to calculate on your own, especially if you're an intraday trader. And so what we've done is made it into a proprietary color bar tool that really translates what the market wants to do. Now, obviously, if we look at this older chart as I am, the stock has been going straight down and then it goes straight up. Most people, though, would not know you're in a downtrend by somewhere down here and not know that you have changed into an uptrend by somewhere up here. But when we apply the color bar tool, the red bars, consecutive red bars, tell us we're in a downtrend. And we had consecutive red bars way up here. So we knew well in advance that this wanted to go lower. And once we had consecutive green bars, we knew well in advance that it wanted to go higher. So as it says, the beauty of the PET-D is that it literally translates what any market wants to do. And once you have the PET-D, there are dozens of techniques that you can apply to trade with it. Now, let me share with you one today. And this is the one we're going to be talking about using the confirmation method. All right. So this is the technique you're going to be learning today. And you're going to see in some very recent examples how profitable it can be. All right, so let's look at the buy setup rules. Let's say you want to go long, all right? What exactly are the rules? And remember, I'm going to give you some written down rules here so you can have for your own files when you get this recording. But we're mainly going to explain, it's going to seem a lot simpler once we look at the chart examples. All right, so these are the rules if you want to go long. price must be above the 50-period moving average. But price is above, but it now starts to decline or sell off, all right? At this point on our platform, you want to click on the PET-D color bar tool. Now we're going to apply the confirmation method, which I just taught you, only to the red bars that appear. This means you will buy when price trades above the previous red bar, okay? So that's how we take our trading up a notch with this technique, that we only apply the confirmation method to the red bars that are above the 50-period moving average. All right, so let's look at that first example I shared with you in SFIX, okay? Hard to say. All right, here we are. Price is above the 50-period simple moving average and begins to decline, all right? So stock was going up and starts to decline. This is where you wanted to originally buy, right? Because you said, hey, it's come down to that Fibonacci support level, and I've been taught in that $10,000 class, that's where you want to buy, right? Okay, now, what we want to do, once we see that price is declining, we click on the PET-D color bar tool that you'll find on our platform. And automatically it changes the colors from green to red. And there is our first red bar. So this is the bar that you normally would have purchased at, right? But now, what are we going to do? We're going to apply the confirmation method to the red bars that appear. So we're not going to simply buy here, even though we say, but Steve, it's so low, we're buying at the low. And if we use the confirmation, I'm going to have to buy all up here. Okay, that's all right. Remember, it's not about picking the lows. Or if we go short, it's not about getting in at the highs. Remember, that is a gambling mentality. That's where you want to, I bet on this long shot and it came in, all right? That's not the way professional traders think. Professional traders only want to have the odds in their favor. The way you do that is by applying the confirmation method. Okay, so let's see what happens. Did we trade above here on the next bar? No, we didn't. So now we lower our entry down to here. All right, we continue to follow it and track it. Now look what happened. Had we bought here originally, we're already losing money. But with the confirmation method, we haven't even gotten in yet. Now here's an update, but all the bars are colored red and they're outlined red. So we're still going to use the confirmation method. Now we go down even further. Now, here's our entry point, which is well below where we would have bought on the first bar. So now we're even saving money and we haven't even gotten into the trade yet. Now we're really saving money because now we'd be buying well below. So we continue to track this all the way down here. And at this point, we're going to buy when price trades above the previous red bar right there. That would have been our entry point. A lot better than just simply buying right here, right? And then potentially you could have captured 57 points in the next 2 to 3 weeks. Now, 57 points represented 100% price gain in just 3 weeks. You made 100%. The stock rose 100% of its price in just 3 weeks, all because you used the confirmation method. Had you entered the way you normally do, you most likely would have said, I'm getting out of this. I can't wait any longer. I can't lose any more money. Isn't that usually what happens? By the minute you sell and say, I can't stand it anymore, that's when it starts going up, right? This is how the confirmation method can help you. Remember, the confirmation method is not 100% foolproof. It's not always going to get you in at the lower price than you originally wanted to. But remember, it's about putting the odds in your favor. That's what we're looking for. We're not looking to buy at the low, and we're not looking to sell at the top. We're looking basically to enter and then have the stock or the future of the currency pair go in our direction. Because the worst thing you can do is to buy something, as we would have done here, and see it go the opposite direction, right? The minute you buy. It's the worst feeling in the world. Or sell something, and the minute you sell it or buy the puts, it goes straight up, right? That's what we're looking to avoid with the confirmation method. All right, so let's look at the setup rules. Once again, I'll go through these really quickly, and it makes more sense once you look at these slides. What you want to see that price is now below the 50-period simple moving average, but it starts to rise, it starts to bounce or rally. At this point, we click on the PET-D color bar tool on our platform, the PTS Primo charting platform, and we apply the confirmation method, meaning that we're only going to sell if it trades below the green bars. So this means we will sell or go short when price trades below the previous green bar, okay? So let's see what that looks like. All right, let's look at this example here in ADP, all right? Where is price? Above or below the 50? It's below, okay. And price is now starting to rise, right? As we see right here, it's below, but it's starting to bounce a little bit. So we're not going to say, well, hey, this is the beginning of a new uptrend. No, the first thing we do is we apply the 50 period, or I should say not the 50 period, apply the PET D on our platform. So we click it on, and here's our first green bar. So even though we're bouncing, most traders would say, but Steve, that chat room I went to says that we're going straight up. We've got to buy this. Nope, we're below the 50. We don't want to buy anything below the 50. And what do? If we want to go short, if we're interested in selling, we are going to apply the confirmation method to the green bars that appear. So here's the first green bar. That's where we'll sell. It's the only place we'll sell if it trades there. And let's see what happened. Nope, it went up higher. At this point, you're saying to yourself, Steve, that chat room told me to go long, and I'm giving away a lot of money. Well, if you want to really put the odds in your favor and be a consistent trader, you should be looking at this from a short or a selling point of view. So here's where you want to sell. At this point, you're saying, Steve, I just blew a 10-point gain here. You're really killing me because I could have made 8 to 10 points in like 3 days. Sure, but you'd have to be quick to get out because look what happened. The very next day, it kind of stalled. And you say to yourself, no, but it's going to go higher. That guy in that trading room says it's got to go up another 20 points at least. All right. But as it's going up, we're continue to apply the confirmation method. Now, as you see here, this is where students have trouble. They say, well, we closed above here, Steve. Why are we applying it? Because remember, your entry would be below. So even though in this case, we are above, these two bars are above, your entry is still below. So even though this is a little bit more aggressive, you still could apply this. And look what happened on the next bar. You sell when price trades below the previous green bar. And now you would have entered below the 50. And you say to yourself, well, I would have got out, Steve. I would have made it quick, maybe 8 points or so. Well, that's not bad. But wouldn't you have rather sold and potentially made 25 points? You see how the odds are in your favor if you only buy when you're above the 50 and only sell below. These are edges that I continue to use in my daily trading, and that's what sustains you. Sure, you're going to miss some great trades where you want to throw your computer through the window and say, gosh, why didn't I buy that? But Steve said I couldn't do it. Remember, it's a numbers game. It's all about 2 steps forward, 1 step back. All right, so let's look at some recent technique examples, okay? We showed you the process. Now let's look at some things that happened within the last couple of weeks or month. And remember, everything you're seeing is a display taken from the PTS Primo charting platform, the educational platform that actually teaches you how to confirm a winning trade. And everything is 1 click away on our platform. All right, let's look at this example in UPS. This was just last week, all right? All right, price is above the 50-period moving average. So we only want to be a buyer. So we look for a sell-off. Here's a 1-day sell-off. Someone would say, but Steve, some bad news happened. I'm not supposed to buy this. I always was told and taught that if bad news comes out, you don't want to do anything. Well, trust me, I stopped looking at news 45 years ago, and I'm still here. So you can look at news if you want, but there's, in my opinion, there's absolutely no news that you should look at. Just look at the chart. It's telling you everything you need to know. So where you would have avoided this, I would have said, hey, there's a confirmation method set up right there. And look what happened on the very next trade. You would have entered and gone long right there. And in 2 days, you could have made a quick 10 points. All right? What happened to the bad news? What happened to that terrible information that caused the stock to gap down like that? All right. Here's an example in Apple. And this is going back a couple of months to May, beginning of June. We are below the 50, so we're looking for a bounce. All right. The bars are all red, and here is the bounce right there, and the bars turn green. So we apply the confirmation method, and we continue to raise with every time we have a higher low. And at this point, we enter, all right, because we traded below the previous green bar. And that's where you would have sold. Maybe you bought the puts, maybe you actually sold the stock. And some people would say, but Steve, I sold, and look, we closed up towards the high. It's okay. The odds are in your favor because you use the confirmation method and this technique with the PET D, and because you're below the 50, the odds are in your favor that it's not going to work out to have a really strong rally to the upside. And look what happened. 18 points coming into July, okay? Here's another example, FIVN, all right? This was just a couple of weeks ago. Now, price was originally below the 50, and it bounced above. So now we start to look for a sell-off. Here's the sell-off. Here's another one, and now the bar is red. So we would have had an area to buy right here, but look what happened in the next bar. Went lower, so now we lower our entry right here using the confirmation method. Remember, even though we close below here and then we're penetrating the 50, if our entry is above, it's still okay. And you would have entered on the very next bar right there. 15-point bounce in one day, okay? Not a bad little quick little trade, right? Stock gained roughly about 15% in one day. Here's an example in Meta, all right? This is an older example going back to June, all right? Prices below the 50-period moving average. Here was a little one-day bounce and the bar turned green, so we would have put our confirmation entry right here. But the next day, the bar is red. So we're not going to raise it because that's a more advanced way to trade. We'll just keep it right here. And then the next day, another green bar appeared, but it never went down. So we put it here and we continue to raise with every preceding green bar. So we're still okay. We haven't entered into the trade yet. And on the very next bar, we entered and look what happened. A big, strong red bar down, all right? So we're short. And we could have quickly made 18 points. Now, if you miss that, or if you'd like to add on to your positions, there's also other examples to get in. For example, you could have gotten in 1, 2, 3 points right here, because the same process can be applied. On this bounce, you could have entered here for this little sell-off. On the next bounce, you could have entered here for this sell-off. And the next bounce, you would have entered on the gap down for this sell-off. So it all depends on how you want to play it. Remember, you are in charge. My job as a teacher is to show you these high probability techniques and methods, and for you to learn how to trade them like the back of your hand. Your job is to decide how you want to trade it, okay? Here's an example in GPC, all right? We were originally below the 50. Here's where we would have applied a confirmation to go short, but now we are completely above, and we have multiple green bars above. So now we're looking for price to sell off. Here's the first red bar we would have placed up above here. Here's the next one, the next one. And remember, even though these last 3 closes are below the 50, where would our entry be? Above. So these are still valid, even though they're a little more aggressive. They're still valid setups, even though we only have a small sell-off. This is still telling us that it's okay. You would have bought on the very next bar 20 points coming into the end of last month, okay? Here's an example in KLAC. Originally above the 50, on our first red bar, we would have placed our first entry here, and then we didn't enter, so we entered the next one here. Now we are completely below the 50. And if we enter, we'll be entering below the 50, so that's not a valid setup. So let's just look at this as a downtrend, overall downtrend. We look for a bounce now. Here's the bounce. Here's the first green bar. We would have had our confirmation right here, and here's the second one. Now, once again, someone could say, but Steve, they both closed above the 50. That's okay. Where would our entry be? Our entry would be below on both of them, okay? So this is the one we're looking at. On the very next bar, it traded, and so we're short below the 50. And this was just last week, by the way. That was a 52-point sell-off in just 4 days. This just happened last week using this simple technique. If you notice, in this technique, have I mentioned anything about earnings? Have I mentioned anything about the employment numbers or the GDP or what's going on in the world? Okay. Did I mention anything about overbought, oversold, or support and resistance? Absolutely not. Remember, I was taught those same things. Those are the things that are going to make you a consistent and a profitable trader. And they didn't make me a dime in the first 2 years of trading. I was lucky enough that my mentors finally sat down and talked with me and shared with me these same things that I teach you. And these things have sustained me. Not news, not support and resistance, not Fibonacci retracements. No, just what is on the chart. Make your trading simple, and that's how you become consistent, not by blindly following something that you have no idea what it's based on, okay? Now, I want to show you quickly some other markets and some other time frames, because we know not everyone just trades daily bars of stocks. What if you're an intraday trader, okay? Well, here's a chart, 10-minute chart of the spiders. If you look back, this was July 28th, this was last week. The same process applies, even though we're looking at a 10-minute chart, all right? We're above the 50, price is rising, we look for a sell-off, and there's the sell-off right there. So we would apply our confirmation above each one of these red bars until right here. That's where we would have entered when we traded above the final red bar. Could have entered right there on July 28th, and in the next day or so, potentially made 12 points, which represented hundreds of points in the Dow. Okay, it just happened. That's something you could have taken advantage of. What if you are a Bitcoin trader, a crypto trader? Here's a example of crypto, of Bitcoin. We fell below the 50-period moving average, so price is falling. And here's an example of a one-day bounce. All right, the bar turned green one day and then quickly went below. But we would have gotten short right here below that. And look what happened. 20,000 points. Okay. You think that could have helped you? Now, if you notice later on, if you missed that, there were other examples right here. You could have gotten short on this 2-day bounce here. Got short again there. Got short again here. Lots of ways to trade this. And then finally, the Swiss franc. Okay. This was a couple of months ago. Price is above the 50, rallying very nicely. All the bars are green, and now we start to get the red sell-off. Each one of these red bars we would have entered if it traded above. We never traded above until right here. Okay, this was coming into June. 420 pips. That's over $4,000 per unit. Okay, that you could have potentially captured. See how simple this is, but how powerful it is. Okay, so let's recap. Once again, if you're a buyer, here are the rules. Price must be above the 50. But it now starts to decline. At that point, you want to click on the PET-D color bar tool on our platform. You're going to apply the confirmation method, meaning that you're only going to buy if it trades above, and you're going to apply it to the red bars only. So you'll buy when price trades above the previous red bar. Now, if you're selling, we just reverse the rules. Price is below the 50 period, but it now starts to bounce. It starts to rise. At this point, you click on the PET-D color bar tool on the PTS Primo charting platform and apply the confirmation method to the green bars that appear. You're going to sell when price trades below the previous green bar. It's that simple. So ask yourself, we are halfway through 2022, more than halfway through. Do you think this confirmation tool can help your trading for the remainder of the year? I think if you honestly ask yourself that question, your answer will be yes. So because of that, because of this big crowd we have today, we have a great special attendee discount. We're going to offer you our roadmap for any market course. This is a PET-D course. We call it the roadmap for any market because you can simply apply it to any market. I shared with you, 10-minute time frame chart of the spiders, daily bars, weekly bars. Also, you can apply it to currency pairs, cryptos, futures, makes no difference, ETFs, all right? You're going to get the proprietary color bar algorithm. It includes the add-on. You can add it onto your platform if you like. This comes also with 2 continuation trading techniques. All right, so we're also going to throw in 2 more trading techniques that are in line with the trend and 2 more pullback trading techniques. What I shared with you today was a pullback technique. You're going to get 2 more pullback techniques. You're also going to get a trailing stop technique. Remember, you can apply to any market and any time frame. Here's the good news, though. Everything I shared with you today was taken from using our platform, the PTS Primo charting platform. Now, everything is one click away. If you use the add-on onto your platform, like Metastock or like TradeStation, sure, you'll be able to see the red and the green bars, but you'll have to open up and look for the the tools, and then look for the indicators, and then scroll down the list for the PET-D, click on the PET-D, hope it works, and then after that process, you've probably forgotten about the trade. With the PTS Primo charting platform, everything is one click away, and it's right there. We developed it and designed it, Pro Trader Strategies and myself, to make it simple so that you didn't have to worry about all of that. You can also scan for PET-D setups as well. So here's the beauty of this. We're going to throw in for today only a full year of the platform, absolutely free. All right, so you won't have to worry about uploading the PTS, or I should say the PET-D tool on your platform and making sure it went okay and seeing what the process is. It's already preloaded. Everything's right there. It's a click away. But for one day, today only, you're going to get it full year, absolutely free. Now, the best thing about this offer is that you're not going to just get the PET-D. This comes with a host, I'd say dozens more techniques and methods that you won't find anywhere else. Things like one-click PET-D access along with our buy-sell line. That's 4 different ways of determining what the overall trend is. A strength of trend tool that tells you if there's still room left in for an uptrend or a downtrend, or if it's running out of steam. You can get the signal scanner. You can scan for PET-D setups. over 90 of the most prominent technical indicators. Also, auto-generated exit levels. We didn't talk about exits. We only talked about a technique today. We didn't talk about stop placement. This is all included as well. And this all comes with personalized tech support. This is a great offer today only. A full year of this absolutely free. This is really worth its weight in gold. Along, you're going to be getting the Pet D course. Now, I know a lot of you would say, well, Steve, you pretty much, gave us all the information I need to know. I really don't need that Pet D. And I think I can kind of do this on my own now. I know when we're above the 50, I can use that on my platform. And I can kind of guess when we're in a sell-off and when the Pet D would have colored these bars red. So I got to figure it out. I don't need to spend any money. Well, let me share with you what happens to most students. Here's an example in the QQQs, the ETF that represents the NASDAQ. Most people think, hey, I don't need this tool. I don't need this platform. I can do it on my own. Just plot the 50-period moving average, okay? And price is above the 50. So I'm going to look for a sell-off, all right? So now we start to see a sell-off. You say to yourself, oh, okay, this is easy. So I'll just apply the confirmation. I'm sure these bars are red by the Pet D. So I'll use the confirmation method, and you continue to use it. And at this point, it trades above. So you go long. You say, this is simple. Why do I have to waste my money on that stupid tool and on the platform? I can do this on my own. All right, and I'm making money already. That chat room I go to says the QQQs are going to make new highs, and it's going to take off, and there's supposed to be good news coming out about the unemployment number. So I'm really set here. I don't need, I saved myself a lot of money, right? And then this happened, okay? Look familiar. What happened is that you didn't confirm it with the Pet D. Sure, you use the confirmation method, and that'll help you. But to take it up to the next level, you need the Pet D. So let's see what would have happened if we had the platform. On our platform, simply click on Pet D right here. And remember, if we're buying, we're going to place our confirmation over the red bars. Now look what we did here. This was a green bar. Therefore, we should never have bought because it wasn't confirmed by the Pet D. Now, when the Pet D started to turn red, this is where we would have added our confirmation. And we never would have gone long the QQQs because at this point, now we are well below. And if we were to enter, we'd be below the 50, which is an invalid setup. So basically, you lost a lot of money trying to figure it out and do it on your own. But if you had the platform, if you had the Pet D, and you knew how to do it correctly, you would not have ever entered into the trade and saved yourself a lot of money. Take your trading to the next level, all right? I know you might be having a terrible year or a tough year, or maybe you're just not seeing the type of results you thought you would get with that $10,000 product you purchased at the beginning of the year. Become a student of the Pet D course. I'll be there with you every step of the way, answering any question you may have. Here's the great offer we have, okay? Let's break it down for our roadmap for any market. Now, normally, without the special we have today, the Pet D course and the application will cost close to $5,000. And that's not even including the platform. If we threw in the platform, we're talking close to $6,200, okay? Obviously, we're not going to charge you that today. Here's what we're going to charge you for everything altogether, reduced down to $39.95. You're going to save over $2,100. But the best thing is, Pro Trader Strategies has told me that they will now have payment plans available. So for a small deposit, just a very small deposit, you can still be up and running as early as today and just establish a monthly payment plan. You don't have to come up with $39.95. You don't want it. Once again, just a very small deposit. You can still be up and running and have the Pet D on and the PTS Primo charting platform already on course for you to start using it as early as today. This is a great, great offer. It's for a limited time only. So here's how to take advantage of this. Contact Pro Trader Strategies. They developed a platform with me. They're in charge of all the discounts and all the tech support for the platform. You can email them at trading@protraderstrategies.com. I would highly suggest, once again, giving them a call, 310-598-6677. Talk to one of their trading consultants on the phone right now. They're manning the phones. They would be more than happy just to give you a quote. You can call them up right now. There's absolutely no obligation. They can give you a payment plan quote so you can think about it. But my only suggestion is don't take a long time to think about it because this offer may be gone after next week, okay? Now that link you see at the very bottom right here is the link that will take you to the sign up page, okay? But it's not a live link. If you look on your chat box though, open up your chat box, there is a live link that's just been posted there. And you can click that on and it will take you to the sign-up page, okay? Now, I'm going to leave all this information up here so you can copy down, or you can go on the chat box and click on the link, or you can copy down the phone number and call up Pro Trader Strategies. If you have any questions, just go to your question and answer box, and I will answer them to the best of my ability. Let me see here. We have some people already. I don't want to miss anyone. Someone's asking, when exactly do you put on the trade? Well, remember, we share with you a number of different ways. You can put on the most basic way. Let's say the high of the bar is 50 and you want to buy it, and it meets all the rules. So you buy at 50.01. That's one tick above. You can do that, okay? So you place a buy stop, or if you're in front of your computer, you can just simply buy at the market when it trades one tick above. Remember, a tick is just a unit of measurement. For stocks, a unit of measurement is 1 cent, meaning that a stock will trade at 50, 50.01, 50.02, 50.03, okay? So that means one tick is 1 cent. Now, a number of our students have said, you know, Steve, I like to be a little more conservative. I will buy it up maybe 5 or 10 ticks, or maybe even 25 cents, 25 ticks. That's perfectly admissible. It's up to you. But remember, you're in charge. As I said in the very beginning, it's up to you to make your own trading decisions, not us. This is not a system where everyone trades the same way. That goes entirely against our educational philosophy. We feel the opposite. We feel that no two traders should ever trade the same way, because everyone's different. Someone may say, you know what, I'm a more conservative trader. I'll buy it up 15 ticks. I want to make sure that it goes above. Or another trader would say, I just want to get in. The minute it trades 1 penny above the high, I'm buying at the market. Another trader would say, you know what, I'm only going to be in and out for 1 point. I just want to get in and out quickly because I like to trade a lot and don't want to tie my money up. Well, another trader would say, no, I saw that one example where they made 57 points. I'm going to stand for as long as possible. And we show you how to do that. So everyone has to trade according to their own means, according to their own risk parameters, according to their own capital. You know, not everyone has $1 million. Some traders have a large capital, reserve. Others don't have more than maybe $10,000 or so. So everyone has to trade according to their own means. All right. So we share with you the basic steps. It's up to you, though, to decide how you want to do it. Okay. Good question. Someone's asking, what if we have a question? Well, if you notice, let me just backtrack here. In the offer, we have educational correspondence right here. That is my personal email. Everyone will get my personal email that becomes a student of the course. You can contact me whenever you'd like. And I often say, because I know this is what happens with other websites, they give you an email address or a phone number, and you think you're going to be talking to the educator, the person that you went to the webinar to listen to, and you're actually talking to an intern, or maybe their son or daughter, or maybe you're talking to an assistant. Well, everyone gets to send a direct email to me, okay? No one else sees it. I don't have a secretary, an assistant. I don't have an intern. This is everyone will send them directly to me, and I'll answer them as soon as possible, okay? I was answering emails before this presentation today. So that's how you would contact me if you have a question, all right? And I try to get back to you within the next 24 hours. Sometimes it takes a little bit longer if there's more people waiting in line. We always, will answer the earliest emails first. But I will eventually get back to everyone, okay? Someone is asking, can we do this intraday? Yes, maybe you wrote this question before we showed you the intraday example. Remember, I shared with you a great example that just happened last week, a 10-minute chart of the spiders that I believe made about 12 points. That was like hundreds of points in the Dow just based off that 10-minute chart, okay? So yes, you can use this if you're trading Tesla intraday, if you're trading IBM or Apple intraday. The same process will work in any market, in any time frame, and in any direction. And the last thing I want to mention is that, remember, this is just one of the trading techniques. You're going to get 4 more trading techniques exclusively to the Pet D. So this is just one of them that we share with you in and of itself. All right. So you're going to have lots of things to apply. You'll also get a stop placement type of technique as well. Right. Good questions. Any more while we still have it? Remember, that link to the chat box, or I should say that link to the info page is in the chat box. So all you have to do is go there, and you can click that on, and it will take you to that sign up page or the info page. One more question. What is the difference of the colored in bars and the outline bars? Good question. Well, if a bar is colored, if the entire body is colored, that means usually that it was a down day. But for some reason, in Western terms, a down day usually meant that it was hard for people to understand that, using candlesticks, we were down. So they decided to color all down days red and all up days green. But this is the beauty of the Pet D. The Pet D says, listen, sometimes you can have a down day and the short-term trend I'm translating is still up. So I'm going to color that green. So the color will often tell you what the Pet D is saying. Let me just, if I can backtrack here, if you just bear with me, I'm going to backtrack to one of those examples here. Okay, as we see right here, this was a down day, right? And it's colored green. Now, mostly if you're just using standard candlesticks, this would be red, but the Pet D is telling you and translating that I want to go higher. And look what happens. It went higher. All right. Now, at this point, we have more green down days. And the Pet D is saying, I want to go higher. Okay, so it goes up and look what happens. It goes higher. But at this point, it was wrong. It was still down. It said it wanted to go higher, but it changed its mind and started to turn red. At this point, it was wrong. And it said, I changed my mind. Now I want to go lower. Now look what happened here. It's an up day. All right. Now, an up day is just called a hollow body. It just uses the background of the chart. And so you say, well, usually an up day is colored green. No, not with the Pet D. We're using the traditional Japanese candlestick method. What we're doing is leaving it hollow, but the outline tells you what the trend is, what the translation is. Now, the outline is red. So this is telling us this is an up day, but the market still wants to go lower. And look what happened. So you see the power behind just the Pet D tool. It's so powerful just using it in simple context like this. So even if something is outlined or fully colored, the color will tell you what the market wants to do, all right? Not the standard traditional way of using candlesticks. I hope that explains it as I go forward here, okay? But these are all very good questions. Remember, for more questions to be answered or for pricing, remember, the best thing to do is to contact Pro Trader Strategies. They can give you a quote. There's absolutely no obligation. I know a lot of people are afraid to call websites sometimes because they think, well, they're going to try and sell me something and I don't want to come up with $39.95. That's okay. There's no obligation. They can give you a quote and you can think about it. And, most people do decide to come back because it's such a great, great offer. You'll put down a small deposit and just establish a monthly payment, but you can be up and running in the next day or so. So remember, call this number, area code 310-598-6677. A trading consultant will be there to answer any question that you may have about price or about tech support, about data, things of that nature, okay? Okay, if there are no further questions, and these were good questions, as we take one last look at our disclaimer, I just hope you learned something today, and especially about our philosophy of education. Remember, we want to educate you with our ultimate goal of putting you in charge of your trading destiny. Think of it. Most traders make their decision by listening to someone or something else tell them what to do. That goes against our philosophy. We want to give you the information so that ultimately you make your own trading decision. The only way you can do that is with sound fundamental education, and that's what we believe in. We are first and foremost an educational company, and we simply want to educate you. Okay, as we close here today, I just want to say thanks for taking time out of your Wednesday. I really wish you all the best of luck, but most especially, I look forward to all of you becoming students of mine in the Pet D course. Thank you so much. I'll see you in class. Bye-bye.